JP Morgan is saying to buy AMC stock. January will be a huge month for these hard hit stocks. 10 riskier names to load up on from JP Morgan. Now, I am not in any way, shape, or form saying it matters what JP Morgan says, but if they're saying to buy AMC and specifically 9 other risky stocks, then that's something to be bullish about. Why? Because other people look up to JP Morgan. It's no surprise. So that will help to bring more money into AMC. Let's take a look at what they are saying about AMC. In quotes, we expect the upcoming January effect to be even more pronounced this time around, given extreme positioning and sentiment, with a potential for a large, high beta squeeze. Funding could come from increasingly crowded low-volume stocks where investors are again paying record premium for that shelter, said Lakos Bujes. Basically, what he's saying is what I've been saying this whole time. All of the money is flowing into these non-volatile stocks, your big cap companies, your Apple, Microsoft, Google, Amazon, Tesla, Nvidia, even Netflix a little bit. They are down more, but it's flowing into these stocks, whereas your other stocks, like AMC included, are not getting any love from big money. Here are a few recently crowded top momentum stocks now at a significant discount highlighted by the bank. New Fortress Energy, Maztec, Plug Power, Peloton Interactive, Under Armour, Macy's, Gap, Moderna, Novax, AMC, and Pins. So they are essentially saying you should buy AMC for the January effect, for this money to flow from out of the safety tech stocks, like the big cap stocks, back into these stocks. This is incredibly bullish. We don't need JP Morgan's confirmation, but nevertheless, it's good to have it than not have it. That's the way that I look at it. Feel free to do what you guys want with that information, but now we need to go over an intraday update for AMC, where we currently sit, because AMC is having a very strange day as far as the technicals are concerned. We're really in between this range that we have been talking about, that we need to either pick a direction. And you guys can see these are the Bollinger lines. The green line on the top and the bottom, that's 2 standard deviations away from the current share price. In the middle, this is the 20-day simple moving average. We have not been bullish on this or not been above this 20-day simple moving average since about November 22nd. This is very key because we are literally riding the close of this line for the past, 1, 2, 3, 4, 5 trading days now, and we are right on this neckline. That is the support level between the two shoulders. This is the level you want to either see a lot of support, or you'll see that breakdown down to about halfway between the bottom of the head and under the neck, and that would be to about $25 per share. But we are not picking a direction. We are literally at $28.50 per share. That is where the 20-day simple moving average is, and that is also where the neckline is. So we are in this very tight range, and I do expect even possibly here in after hours to get that break and to see a move to the upside or potentially to the downside in a substantial way. If not, by the end of this week, we are going to choose a direction. I think it's going to be bullish. Why? Because the MACD is also incredibly bullish as well. You guys can see we went bullish, and that's where the CCC line, this yellow line, is above the blue line. That is basically taking in a lot of different calculations to sum that up without getting into it too deep, taking a bunch of calculations, summing it up into the price action, and creating this sentiment. So we are bullish. The yellow line is above the blue line, and we're quite substantially bullish at this current moment. We've been getting more bullish with this gap that is widening as the price has essentially been going down over the past 5 trading days. We were at a high of about $32 per share December 21st, and we have sold off all the way down to $28.38, but the MACD is still incredibly bullish. We're also seeing low volume, which is bullish in the longer term sense of the trade. You need to see low volume heading into high volume to see big increases to share value. You will never see the moass or never see a continued bullish effect from high volume, next day low volume, next day higher volume, next day low volume. It doesn't work like that. And this is a huge misconception and misinformation that is spreading in the community. You will always or almost always see a big increase in share value going from that low volume to high volume like we've seen in January and we've seen in June. What you don't want to see is what we've seen back here in August, basically throughout all of summer, where this constant difference of high volume, low volume, almost any given day. So right there, incredibly bullish. Watch for that volume to come back into the stock and watch to see that move to the upside. Inverse head and shoulders looking very promising. Now, I do also want to get into the option activity and why January is really going to be so significant, because we know a lot of the short interest is actually hidden on the put option chain. That's why we're seeing 317,000 puts that are out of the money for January 21st, 2022, 61,000 that are in the money, but a substantial amount of these puts are significantly underwater. As well as time does go on, you're going to see essentially the puts keep losing value because of theta decay. That goes without saying. Now, the hedge funds, in order to keep hiding their short interest, they have to buy more puts. And this becomes incredibly expensive to do this on a large scale with a lot of shares you're trying to hide from that short interest. But it's coming down to the wire. They're going to have to either roll these over till whatever date they want, probably end of 2022, if not 2023 or 2024. And then that's going to cost a lot more money, even on top of what they're paying to have the shares out on loan. Probably, 2 to 5% on average, I would estimate, just to service their loan, service their short position. So when you add all that together, if they can't afford to keep rolling over their massive short positions, they're going to have to cover. And I think it makes a lot of sense heading into 2022 and in January, as we do have the January effect. AMC is going to have a great year in 2022. I cannot underestimate this or overestimate this enough. Whatever you guys want to call it, they're going to have a fantastic year. If you guys watch this channel, you already know why, and I don't want to dig into that too much, but they are going to turn a profit, in my personal opinion. I think there's no way they don't unless people magically stop going to theaters, and that's obviously not the case. As far as the Ortex data, we're getting a current short interest of free float of 17%. Estimated shares that are sold short of 87.25 million. Why has this estimate just went down so much? Because we got the exchange reported short interest data. The sentiment day was December 15th and the release date was yesterday. Shares that were sold short 96.7 million. Short interest of free float almost 19%. And we know most of the short interest, like we just went over, a substantial portion of the existing that is not accounted for short interest is being held on the option chain. So it's no surprise these didn't come in at their real short interest. That's no surprise. This shouldn't be a surprise to anybody, but these numbers really don't matter in the grand sense of what is going on. A lot of manipulation, a lot of shares that are unaccounted for that will have to be covered here pretty soon, in my personal opinion. Now, the share utilization is 77.47% and the days to cover at 2.35. We're seeing this pretty much flatten out, which is not a bad thing because the price of the stock is pretty much flattened out. So overall, very bullish data that we are getting. Helps to reiterate our case yet again. And the last thing that we're going to cover here in this video is going to be the max pain. Take this information as you guys want, with a grain of salt, whatever. I'm not going to hold as much weight on this by the end of the week because I do think the technicals are very clear and we're going to have to make a big break to the upside or the downside, or at least break out of this range. The max pain is set at $29 per share. So if you agree with that, fine. I wouldn't make any trades around AMC based off of this technical reversal or break to the downside. But hey, sometimes it does work and it's worth at least presenting to you guys. So that is going to be all for this video. A lot more exciting things to come later on today. There is a ton of information we need to get through. So if you guys do want to stay up to date with everything that is going on with AMC, subscribe to the channel, hit the like button for me if you are buying AMC or if you are simply holding the stock. Make sure to check out the links down below for Moomoo. Get up to 5 free stocks valued all the way up to $17,000 if all those stocks are valued at $3,500. I got a lot of good free shares. Technical analysis is great. Free short volume data every single day. Something you have to pay for on other programs. So check that out if you guys do want to. Special code down there just for you guys. Love and appreciate you. Thank you for watching this video. I will see you in the next one.